Hey guys, took a short yesterday on the 20th of August. Keeping this video short and sweet, just want to let you guys know why I shorted it, and let's go. So basically, high time frame on the 1 hour has been pretty bearish, as you can see here, so I'll be looking for shorts only. Bearish because you can see that 1 hour fair value gap here, bearish fair value gap being respected, and also just a lot of downward momentum from the markets, okay? So basically, with that in mind, I went into the market looking for shorts. So we can see here at 7:15 a.m. respected this 1 hour fair value gap. So let me just put that in. Respected it. So when market opened, market quickly manipulated towards the upside and actually encroached into this 15-minute fair value gap here, right? So looking at this 15-minute fair value gap, there were a couple things that I was looking for. So 9:30 open is when the US equity markets open. I'm not looking to, short this right away. I want to look for a little bit of manipulation, right? When price wants to go down, it will manipulate towards the upside first before resuming its trend towards the downside. And if it's bullish, it will manipulate towards the downside first before continuing towards the upside. Now you can see price also created another 15-minute fair value gap here at 8:30. So I'll explain my trade in a second. So 15-minute, I was still looking at the charts. Let's go down to the 5-minute. 5-minute, as you can see here, 9:45 is this arrow here. That's when I executed my trade. Right, so we can see rejection of that 15-minute bearish fair value gap. And on the 1-minute time frame, now this trade didn't make me too much money last night, but it was risk management that saved me. So we can see here, price tried to break through this 15-minute fair value gap and created many wicks. What wicks tell us is that price is looking to reject or potentially rejecting this area here. Okay, so let me just take away that indicator so it's clearer. And what do I look for in my lower time frame model? So I've mentioned many times in my lower time frame models, I'm looking for some sort of liquidity sweep, inverse fair value gap, and also displacement towards the downside. We can tell that there is a liquidity sweep here, right? Turtle soup, that's what TS stands for. And we also have a lower time frame 1-minute inverse fair value gap. So let's make this green. Okay, was there displacement towards the downside? Yes. Show displacement towards the downside. Just let me get my arrow and I'll show it to you. So displacement towards the downside, big full body candles, right, towards the downside here, this way. And my target was actually here. So side liquidity. Why did I target here? Because there's a 15-minute unfilled fair value gap, right? See here? And whenever you see a potentially high time frame fair value gap, price would be magnetized to this area, but it could also be a potential zone of rejection. So price, I was actually looking for price to go all the way down here, right? That's the major sell side liquidity level, but it didn't actually achieve it till the PM session at 2 p.m. So I trade from 9:30 to 11. So I just pretty much closed off my trade for a small win. Right, initially you can see that I entered my trade here, right, to my trade here. I actually put my stop loss above that fair value gap. I'm aiming for actually I was aiming all the way down here. I know I was aiming 1-to-1, but I got stopped out actually quite high right there. So basically I could have held my trade all the way to 1-to-2 because that was the main draw of liquidity, but New York session has been really choppy because it's August. So I pretty much closed off my trade as soon as it hit this 15-minute fair value gap, and lo and behold, actually price actually went all the way. You have taken me out here. So yeah, nice quick trade recap for yesterday. If you guys like this sort of video, comment and subscribe. Leave a comment below as well. And I'll catch you guys in the next one.